great. Once again, the Fed has raised the short-term rate. Hooray! There has been a lot going on in our economy recently. And we've been hearing about banks failing. There was the Silicon Valley Bank just a couple of days ago, was Old Republic, and there's talk of recession. So let's talk about it. As a realtor here in Santa Cruz County, California, there are lots of conversations that are being had about the current economy, where we're headed, and clients generally interested. What does this mean for us as far as us buying or selling? What does the market look like for us? People have some questions. So here are some thoughts that I have. The Fed has been pretty clear about their goal as far as inflation is concerned and raising the short-term interest rate until inflation numbers look better. The Fed essentially wanted to slow down this immense growth and skyrocketing prices. In order to do that, we all know is to raise the short-term interest rate. With a rise in the interest rates, it can make things more expensive for businesses, which could mean job losses. We've already seen some. And if our GDP goes down, there we are, we're in a recession. We had experienced incredible growth over the last couple of years, and it was inflated. So they've raised the rates, and they told us they were going to do that. We've seen 3 recent bank failures, and they might not be the only ones. We all know from It's a Wonderful Life that if everybody goes to the bank at the same time and demands their money is elsewhere. Banks invest the funds that they're given. Consumers, investors, are showing that they're a little bit insecure in how our economy is doing. But I think that the government wants to hedge further runs on these banks by what they've done with these 3 failures recently. Hopefully we won't see any more, but we could. It just reminds me that in times like this is when bigger companies are able to really take a monopoly. They're able to buy smaller businesses and have a much greater market share. People have asked me, is this the same as 2008? And I just like to bring up that this is a different economy and a different potential recession than it was in 2008. If we will remember, in 2008, the lending practices and housing practices of that time are what caused the recession. This, if it becomes a recession, is actually orchestrated by the Fed. Maybe I'm overgeneralizing, probably. I'm not an economist or a financial advisor. This is just my opinion. We just know that the Fed has tried to curb out of control inflation. These changes that they have done may cause a recession. But the good news is, for those looking to buy and sell, is that with a recession, historically speaking, mortgage rates fall to ease the burden on buyers and to promote demand. Overall, in a recession, job losses happen. I think as we're all talking about potential recession, one of the best things that we can do if we're going to be spending money is spend it at local businesses and smaller businesses. When you're shopping online, instead of going to bigger companies, maybe put that dollar towards a smaller business that could really use the help in potentially harder times. Because again, in these instances, it really gives an opportunity for bigger business to have bigger monopolies. All in all, right now, if you're a buyer or a seller, our real estate market right now is incredibly strong. I put out a market update video a day or 2 ago, and our demand is still high, our inventory is still low. Those are big factors in just supply and demand, right? Month over month, our values are up. So right now, things are looking great. And hey, if we go into a recession, historically speaking, mortgage rates go down, making it potentially more affordable for a buyer, which may keep up demand. In fact, I purchased my first home in the Great Recession. The Fed has kind of hinted that they will not be raising the rate next time, but we'll see. Anyway, those are my thoughts for today. Let's see what happens next week.